and this is a Nifty 50 stock where we've seen downgrades with regard to stance, but upgrades with regard to target price. It's an interesting one. And we've had quite a few brokerages do that. Let's first start off with the growth guidance. They've guided for 1.5x to 2x of industry growth. They've not done it in FY25. Can they do it in FY26 and beyond will be the question. Capability is certainly there, but execution not happening. So something to look out for. The bear case, of course, being that FY26 too will be this kind of a year where they're not able to do that 1.5x to 2x of industry growth. So that's on Kotak and on the growth piece. Let's talk about margins next. And with regard to margins, the management gave margin comfort, saying that there's plenty of levers available, especially on the deposit side, to cut rates on savings accounts and therefore protect margins. So that's the bull case here. But in the past, we've had a Bernstein note which said that Kotak has actually lost its liability franchise shine. And if that has happened, you may well see deposits too start to taper in terms of growth. We'll have to wait and watch whether that happens. But if that were to happen, you might well see an adverse impact of that with regard to margins. Let's talk about credit costs, because this time around, credit costs was slightly elevated. Now, it's been a conservative bank with low credit cost, always has been traditionally. But this time around, it's been a bit of a surprise. Microfinance and unsecured, they want to increase the pie of these within the overall loan mix. And if that were to happen, could credit costs actually continue to surprise and be elevated? Fourth piece is with regard to evaluations. It's trading at 2.5 times 1 year forward. Traditionally has traded, the 5-year average is 3.1 times price to book value. But stock has already outperformed sharply in the last 6 months. We've seen a very significant outperformance versus how the index has performed, of course. And Kotak has been a rank outperformer. Has that outperformance already been baked in is really the question. Mind you, the average analyst estimate as of today on Bloomberg is just an 11% upside. So a large part of the outperformance complete, or is there a re-rating towards 3.1 times warranted? Mr. Chokalingam, let me come straight to you. Do you believe that Kotak at 3.1 times price to book is a fair thing to expect? Because currently at 2.5, how are valuations looking to you versus the result, and which side of the fence do you sit on where Kotak is concerned?
I would say that at best it can be given a hold rating for medium to long term. I don't think it is going to create a significant return in the short term because private banks are going through a little difficult time in consolidating and growing the CASA deposits, low cost deposits, and industry credit growth also has come down to 12-13%. And even Kotak Bank, which used to grow at a phenomenal rate, its advances, has grown in this quarter on year-on-year basis 13% only, around 13%. So definitely it's going to have a little kind of pressures in the short term in growing business in a strong double digit. And still I would give for long term it's a hold, because it is one of the few banks which has not unlocked money from the majority of the subsidiaries. Still, majority of the subsidiaries are closely held. Last year they started unlocking only from one insurance venture, but there are a lot more ventures like securities, other insurance firm, and then wealth management, etc. So therefore, short term just a hold or buy on decline, but preferably below 2000, and hold it for long term. But definitely beyond 1 year, you might expect some significant return.
And Hemen, if I can take your view, I know you're bullish with regard to Kotak, but given the kind of reaction today, would you wait? Are there levels you're looking out for before you enter, and what are those levels?
Yeah, no rush, Harsh. We've not closed above, or we haven't sustained about 2250 in terms of Kotak in its listed history. So if the stock moves up from 1550 to 2300 and cannot sustain about 2250 in the first attempt, not very surprising. I think it's just making it healthy. Okay. Having said that, 2050 is the first level where I think one can start nibbling. And below that, you have supports coming in at 1980 and 1850. So, but 2050 is where one can just about start entering, not don't do the whole hog at one go. Yeah. So after 4 years, yes, and like you said, I'm still bullish about 20 to 50 Kotak should do much better.
Very interesting. 35% in the last 12 months is what Kotak has done. But what we're going to do is slip into a very short break. On the other side, we'll get you what to expect from maybe Godrej Consumer. We'll also get you BTST picks. We'll get you something that Musk's father is going to be investing in or sitting on the board of. Which is that company? Stay tuned for all of that.